Are we allowed to talk about inflation now?
The Fed, who doesn't want to talk about it, is forced to talk about it. The Fed's got themselves in such a trap. 6.2% means that the dollar loses half of its value in a matter of 11 to 12 years. And that's when gold is really going to start to take off.
Welcome to Silver Heist. Thank you to our returning subscribers and guests. We are a channel that likes to hold physical gold and silver. To support my creation, please subscribe.
Well, today we are joined by Mr. Collin Kettell. He has been an active participant in the gold world since 2013. He is the founder and CEO of Nevada King. I'd like to thank Nevada King for sponsoring this video. We're going to talk about inflation in gold. So I'm curious where this is going. So Mr. Kettell, thank you for joining us. Welcome to the show.
Rob, thank you for having me on the show. I appreciate it.
Great. Inflation is really hot in the news right now. So very recently, Jack Dorsey, the CEO of Twitter, recently tweeted, hyperinflation is going to change everything. It's happening. So if the dominant narrative inflation is transitory and the censor is talking about hyperinflation, are we allowed to talk about inflation now?
I think we are. I mean, it's all over the news. I actually did a search a few days ago on Bloomberg.com, and I just typed in the word inflation because every day you go on Bloomberg or Drudge Report or wherever you get your news, inflation's the top headline. And sure enough, there were quite literally hundreds of articles just in the last few days, either written by Bloomberg or syndicated by them. And had I done that search a year ago, you'd be lucky to find 3 or 4. So it's dominating the narrative now. Not only are we allowed to talk about it, but the Fed, who doesn't want to talk about it, is forced to talk about it. And this is a paradigm shift. And everything that you've been educating your audience about and people in our circles who understand the benefits of gold and silver are going to finally start to see the reward from planning ahead.
So let me show you something that I just discovered the other day. So here's a table with real numbers. They represent what the US Treasury pays holders of a special I-series bond. The bond is designed for small investors as a safe, guaranteed hedge against inflation. The rate's adjustable each 6 months and depends on the government's own CPI numbers. So for the last 2 years, these are the numbers. So just a year ago, it was 1.68%. And in November 2021, they are about to pay 7.12%. And that's the highest rate since 1998 when they started this. So looking forward 6 months, do you think their rate in May 2022 is going to be higher or lower?
My suspicion is the number is going to go higher, but I'll also caution that had we talked a year ago and said the official CPI number was going to hit 6.2, you would be looking at me like I'm crazy, and I'd be looking at you like you're crazy. Because we've always talked about the actual inflation numbers are higher than are being said. But now the Fed's got themselves in such a trap that the official numbers on the CPI are at 6.2%. And 6.2% means that the dollar loses half of its value in a matter of 11 to 12 years. We don't need inflation to go much. We don't need inflation to go any higher. In fact, if it stays at 5%, there's a lot of problems, exactly like that I bond you just showed. The same problem is with the Social Security system. Social Security payments are based off of the official inflation number. So the government is on the hook for a lot more money. And it's this death spiral sort of scenario where inflation wreaks havoc.
MSNBC recently tweeted a story why inflation we're seeing is a good thing. And the Washington Post tweeted an opinion, don't rant about short-staffed stores and supply chain woes. Try to lower your expectations. So is inflation ever good for people?
No, it's not. It's funny. You read the narratives and you really just got to think for yourself. Like this is, I know something your whole channel is based around. As of 3 days ago, like we had that tipping point, to use that cliched term. We had the tipping point happen 2-3 days ago, and the inflation, the CPI came out at 6.2%. And what that did is before that, every one of those articles I was looking at said something to the effect of, inflation is still something transitory. It's going to get better next year. Guess what? Everybody is now saying it's going to get worse before it gets better. So none of these people know anything. They don't even understand the concept of inflation because probably the author of that, just like me, wasn't alive the last time inflation was an issue. But no, inflation's not good. The Fed likes to have a stable 2 to 3% inflation because they can handle the side effects that come with it while also burning away at their debt in a controllable way. What we're seeing right now is you get a little bit of a crisis thrown in, and the tools they have cannot control it in the way that they want.
Yeah, so if gold and silver are tangible assets and hedges against inflation, now that inflation is here, when do the metals move?
Yeah, so I've been saying this for several months now. And a guy by the name of Jordan Roy Byrne with the Daily Gold is the one who actually first brought this to my attention. He's done a lot of work on this, but there's been 5 major bottoms in gold in the last 40 years. So you've got 1971, 1976, 1985. Ones we'll remember, 1999, 2016, all major lows for gold. And afterwards, gold really started to move. They all coincided with the Fed rate hike cycle beginning. And people think this is counterintuitive. Why, if the Fed starts hiking rates, is gold going to go up? Because you would think if the Fed hikes rates, then the real rates actually increase. But the Fed is always behind the curve. They're always reacting, and they don't want to overreact. So what it says to the market as soon as they start hiking rates, it says, hey, all that free money that was floating around, it's going to get a little more expensive. So your S&P 500 that's been going is going to start to come off. Your real estate prices that have been driven up because of low interest rates, that's going to start to come off. And the only thing that's going to work is the only thing that has always protected people against negative real rates, and that's gold. So I think if you look back 3 months ago, October was the date that the markets were betting the Fed would hike rates. So October of 2022. They're now saying as of last week, May of 2022. So it's come up 6 months. And that's before the CPI number that just came out, which I didn't think it was going to come out at 6.2. So is the Fed going to hike rates in February now? And that's when gold is really going to start to take off.
Yeah, so what other commodities do you look at for confirmation that gold's time is near?
Well, I always say that the commodities move in tandem. And it's kind of like a bike race where you've got a peloton and you've got a leader, a few leaders, and you've got a few stragglers. Have you ever watched the Tour de France? What happens is that group that breaks away to the lead, they usually get caught. Some of them drop back, and the ones in the back, catch up. And what we're seeing right now is that gold and silver have been the stragglers. This has happened in the past. But look at the other commodities. Some of them are hitting all-time highs. Some of them are up 3x from last year. Uranium is the one that a lot of investors are keenly focused on, up 50% in a matter of a few months. Take that back to gold and silver. I mean, can you imagine if we see a 30, 40% move in a few months, how many people are going to be jumping on that bandwagon? So these kinds of moves, we're all, very up until the last few days in this mental state of why is gold and silver not moving? This is what is supposed to move it. I say, just be a little patient, and the move is coming, and the move is going to be significant.
So you founded 2 publicly traded gold exploration companies. One is Newfound Gold, which is listed on the New York Stock Exchange, has a market cap of $1 billion, and has received multiple cash investments from Mr. Eric Sprott. Can you tell us briefly about your successes there?
Yeah, for sure. So Newfound Gold started back in 2016. I met a geologist who was similarly on the younger side named Denny Laviolette. And we decided to start picking up land at the bottom of the market. And he was focused on Canada. I was focused on Nevada, which I'll leave that part to a further question. But we ended up with kind of 2 different portfolios, and there was Newfound Gold and Nevada King. And Newfound Gold 2 years ago had a tremendous success. We drilled a hole and we hit a bonanza grade intercept. It was 19 meters at 93 grams. I mean, to put that in perspective, it was one of the better drill holes in the world for the year. And this really changed the landscape in Newfoundland. I mean, Eric Sprott, you mentioned him. He's now got a $300 million position in Newfound Gold. He's explaining what's going on in Newfoundland right now as a modern day gold rush. And it's all focused around, what's been found at Newfound Gold. And there's since then been 30, 40 companies that have rushed into the province. Almost the entire province is staked now. When we went there in 2016, there was very little interest. And so it's got the excitement, like everybody talks about this historical idea of a gold rush. And until you see it and feel it, it's hard to explain it, but that's what we're feeling right now. And yeah, the company's in a great spot. We're drilling with 10 drills right now. It's one of the largest drill programs in Canada. With Eric's last injection, we're going to have about $150 million of cash in the bank. The company I'm behind has 30% of the shares. Eric has 20% of the shares. Dr. Quinton Henning's company, Novo, has 10%. So you've got 60% of the entire company in 3 hands. And it continues to find more and more gold. So we're very excited to see how that continues to play out.
So your second gold exploration company, Nevada King, has a different approach. What can you tell me about your Nevada projects?
Yeah, so Newfound Gold's like every other exploration company in that it's a very binary outcome. You find a project, you have a theory. That theory requires drill holes. You drill it, and most of the time you miss. And Newfound Gold, of course, has had the much more fortunate outcome that it's hit. Nevada King is a totally different approach. It's a real estate kind of approach. Back in 2016, we recognized that Nevada, which is the #1 gold mining jurisdiction in the world, and within Nevada, a trend called the Battle Mountain trend, that's the most prolific gold mining trend in the world, was seeing a once in a generation opportunity, which is that the major mining companies had gotten themselves in such dire straits financially that they were dropping their key exploration ground in the trend. And when I say dropping it, I mean they were forfeiting it back to the government. They weren't paying for the claims, which allowed us to go in and stake a tremendous amount of ground through staking, which means we don't have to pay anybody. We pay the government a rental fee each year, essentially. But beyond that, we don't have to pay other companies. We don't have to spend X amount of money. We don't have royalties owed to anybody. And in doing that, we became the third largest landholder in the state. Just to put that in perspective, #1 is Barrick Newmont, their joint venture. #2 is Kinross Gold. So these are household names. And then there's Nevada King, us. And there's not a single other junior in the top 10 list. The concept here is as money comes back into gold, which we already discussed, every time that happens, money rushes into Nevada. And this is very logical. Like when oil prices go up, people who own the land that have oil under them, they can make tremendous amounts of money. And so the idea is we control some of the best quality ground in the best trend. And as money rushes in and rushes into Nevada, we're going to see the fruits of all that hard work. And the last thing to point out is when we went public about 14 months ago, there had not been a single major company re-enter the state for a decade. And since then, we've had 6 or 7 major mining companies enter or re-enter the state with multi-$100-million deals. So you're seeing very, very imminently this move happening where the money is starting to rush back in.
It sounds like great timing, but there's also work to establish that there's more gold under the ground than the last guy thought. Can you tell us about some of your drilling that you've just announced?
Yeah, about a year ago, we decided we had staked everything that there was to stake. That opportunity is gone. And it then became prudent to turn our attention towards what do we have? So we have historical resources on some of the properties. We even have a modern resource on our past producing Atlanta gold mine. And we have a lot of data in these environments. And so to your point, we've went into very data-rich environments where there's past knowledge. Where's the low-hanging fruit? Where can we put this data together from these different periods? What new theories can we apply? And how can we tangibly spend not very much money to really increase what we know about it? So with the Atlanta gold mine, we started drilling about 3 months ago. We did 63 holes, and we're anticipating the assays back from the lab imminently. So in the next few days to few weeks. We just announced last week that we're starting to drill at the Lewis Gold project. That's one with historical resources, about 250 past holes. And you stand up at the top of the hill on Lewis and you look around at some of the most prolific operating gold mines in the world, right in the heart of Battle Mountain. And then we're going to start drilling at another property called Iron Point. That is going to put us in the lead position as a junior, not just in mineral tenure now, but in terms of how much exploration that we're doing. It opens up not just those incremental value increases like you pointed out, it also opens up the potential of finding something brand new, which is an exciting prospect that people who invest in the space like.
Say the gold price goes up and you learn even more about one of your 10 or so properties there, and that attracts the interest of an eager buyer. So hypothetically, are your 10 projects divisible? And how would the sale of one project flow to the individual shareholders?
Yeah, there's a lot of different possibilities here. So I'll start at the opposite side of the spectrum, which is if a major mining company comes into Nevada and decides that they want to compete with Kinross, Barrick, or Newmont, the best way to do that is to control land. And we're about the only group that they could come and buy it from. Are we for sale for the right price? Absolutely. That's what we built this for. Backing up from that date, though, if we have interest on particular properties, we can look to joint venture them. So somebody spends 20 million to earn 50%. We could option them. Somebody pays us a lot of money to control it, or we could sell a particular project. If it makes sense, we could always distribute capital out, or we would use that capital to enhance the value of the existing portfolio.
So I'll leave a link to the Nevada Kings company website in the description below, where there's a company presentation. The ticker symbols are in Canada as NKG and in the US as VKMTF. Is there anything else you'd like to add?
We have, I'm sure you're already going to link, we have a great website, nevadaking.ca. And if anybody has questions directly for me, I'm quite responsive. You can email me, Collin, Collin, at nevadaking.ca.
Well, Mr. Kettell, thank you for your time. Thanks for joining us today.
Thank you very much. It's been great.